Talk about processing faster profits. That's right, processing faster profits with rising semiconductor stocks. What else? In September, early September of 2020, the Semiconductor Industry Association, we'll call it SIA, okay? They announced that worldwide sales of semiconductors for July increased by almost 5% compared to 2019. Sales figures for July were higher by 2.1% than the previous month. Therefore, both sales progressed on a year-by-year and quarterly basis. This is very good news in light of what's happening in the world right now. The SIA represents 95% of the U.S. semiconductors and two-thirds of non-U.S. chip firms. According to John Newfer, SIA president and CEO, sales into Americas remain strong into July, increasing 26% year to year. And year-to-year sales were up globally amongst memory and non-memory products. That's really, really good news. The global semiconductor market has remained largely resistant to global macroeconomic headwinds through the first 7 months of the year, with sales in July increasing on both a year-to-year and month-to-month basis. But substantial market uncertainty remains for the rest of the year, according to the World Semiconductor Trade Statistics, which in addition to providing statistics is also a forecasting institute. The global semiconductor market is expected to grow by 3.3% in 2020 to reach $426 billion. The forecast was done in June. The organization further states that the global semiconductor market is projected to grow by 6.2% in 2021, driven by double-digit growth in memory chips. Also, and this is big, according to the same forecast, all regions are expected to show a positive growth rate. On a practical level, the world is becoming increasingly dependent on chips. Just look at the 5G industry or the cloud industry and imagine when the AI and self-driving cars, oh geez, all over the world. I mean, the next few years, there's no denying it. It's an explosive industry. Semiconductors are going to continue showing strong demand. It's just the way it is. And here's the best part. If the economy slows down due to COVID once again, chip demand is going to rise due to extra demand on technology, much like we've seen between February and July of this year. On the other hand, if economy begins to reopen, demand from consumer discretionary sector will drive sales of new laptops, cell phones, dozens of digital gadgets, that all rely on chips to function. Moreover, or more importantly, if you look at technical performance of the semiconductor index, both the SOX or the semiconductor ETF ticker symbol SMH, and we'll look at it shortly, you'll notice that both are making all-time highs and continue to show outstanding momentum levels. Now, let's dive in and go through some of my favorite chip stocks. Let's do it together. Welcome back. We're now looking at my screen and we're both together on the same page now. And I wanted you guys to take a look at this. This is the SMH. This is a ETF that you can actually trade, the Semiconductor VanEck ETF. And if you noticed here, it made an all-time high just yesterday. What I'm looking for right now is I'm looking for assets that are taking out the high that was made on September 2nd. What is so special about September 2nd? Let me show you something. This is the QQQ. This is the top 100 NASDAQ stocks. And you will see here, look at what happened September 2nd. It made a swing high. Actually, it made an all-time high. But since then, it hasn't been able to take out that high. Notice that? And that's where, that's QQQ is the top 100 NASDAQ stocks. There's a lot of chip stocks in there. Now, if you look at the S&P 500 or the SPY, I'm looking at ETFs that correspond to the overall indices right now. If you look at the S&P, it didn't take out the all-time high till yesterday. So the S&P is higher, but the NASDAQ 100, which is actually focused on semiconductors and chip stocks, is weaker. So we've got to be careful. But most importantly, if you look at the semiconductor index, it bucked the trend. It bucked the NASDAQ trend, and it took out the high. And the same thing with the SMH. It took out the high. And that's telling us that the semiconductor index and the semiconductor ETF, and they track each other with about a 90%, 95% correlation. As you could see, Both are virtually identical. This is the SMH, and this is right here, the PHLX Semiconductor Index. I mean, their correlation is like, I don't know, almost 100%. So the most important thing is, look at this, higher highs, while the QQQ isn't making higher highs, and that's a problem. But as long as the semiconductor index is bucking the trend, that's the sector we want to be in right now. I mean, let me show you this. You could get this trend line view for yourself. Look at that. Lower highs, you see that? And then when we go to the semiconductor index, not the whole QQQ, because remember, the QQQ has a lot of healthcare stocks, it has a lot of consumer discretionary stocks. It's not just semiconductor stocks, but either way, notice that? Higher highs. So that's one of the reasons we're looking at semiconductors, aside from all the fundamental reasons that I gave you before switching to my screen. And with that in mind, now that we know that semiconductors are moving in the right direction and are completely bucking the NASDAQ trend and are looking a lot more like the S&P, the Dow, and the Russell 2000, which is leading ahead of the QQQ right now, let's take a look at 3 of the best and the fastest gaining chip stocks. First one is LRCX. Lam Research enables customers to shape their future of technology. Big semiconductor company. Just to give you some numbers, 1-year return, 50%. 5-year return, 431%. Earnings and dividend growth. How often do you see a semiconductor company with dividend growth? 440% over the last 5 years. This is strong. Most importantly, earnings per share versus this quarter compared to previous quarter, and earnings per share growth compared to previous year is both higher. Very significant. Lastly, if you look at the chart, you will notice that the stock made an all-time high, not on September 2nd, but yesterday, along with the overall semiconductor index. Here's the index, and here's the stock. Notice similarities? And remember, chips trade a lot like commodities, not like stocks. It's a very concentrated sector, and it's based on supply and demand more than anything else. So again, the fact that this is bucking the NASDAQ trend is very positive. That's the first stock. Second stock, microchip technology. And by the way, Lam has been around for years and years. Next stock, microchip technology, manufactures, sells specialized semiconductors, products used by customers for many different applications. Again, look at the performance numbers. Look at this, 5-year return, 167%. Not bad, right? Pretty good, especially compared to the market. Earnings per share growth versus previous year, not as good as Lam, but still 9.52% higher. And again, most importantly, look at this chart. Got to see this chart. And here's the thing, a lot of these stocks have a very strong correlation. So I wouldn't go buying a lot of semiconductor stocks. If you want to do that, just put your money in the SMH, this one right here. And let me show you the constituents of this one here. So you could see all the different stocks it has and the percentage of them. So for example, TSM, great stock, 11%. Nvidia, great stock. Qualcomm. Qualcomm is actually an info technology stock, but okay, fair enough. Lam Research, we just talked about Lam. So again, big opportunities. And if you're looking for more opportunities, just go to constituents in there or go to the Philadelphia. And I don't think this one you can look at constituents. But anyhow, let's look at the next one. The next one is Nxpi. Notice all-time high, completely bucked the trend, September 2nd high. Look at that, higher highs by a long shot, and the stock right now is making all-time highs. And if you look at the profile of this company, you will see, again, look at this, 5-year return, 81%, revenue growth, 57%. It's a solid company. And what I like about Nxpi is it's held by a lot of different institutions and hedge funds. And let me show you this. Earnings per share growth versus previous quarter. Look at this, 241%. And again, technically, the stock is looking really solid. So again, if you're looking to get into the entire industry or the entire semiconductor sector, the best way to go is SMH. It's an ETF, Semiconductor VanEck ETF. It'll get you where you need to be without you having to pick throughout different stocks. But if you want to go for an individual stocks, the three that I really like right now that are bucking the trend are microchip technology, right here, look at that. Nice sideways consolidation, pop, love that. Horizontal, vertical, that's how it works. LRCX, that's probably the number one that I like. It's even outperforming Nvidia. Look at Nvidia right now. This is one of the reasons why I didn't pick Nvidia, is because if you look at Nvidia, man, this thing's taking forever to load. Nvidia did not take out, see, this is the September 2nd high or September 1st high, September 2nd. Still hasn't taken it out. So I'm not liking it. But these three stocks, they have all taken out the September 2nd high, and they're moving along with the entire sector. So again, Lam Research, LRCX, Microchip Technology, MCHP, and Nxpi Semiconductors, all fast-gaining semiconductor stocks, and I really like all three of them. And again, if you're not sure, go with the SMH ETF. Hope that helps.